Asian markets were fluctuating Monday as traders braced for what could be a pivotal week for global economics. And once again, Donald Trump's destructive trade policies are at the center of the chaos. While the Federal Reserve prepares for an expected interest rate cut, Trump's ongoing tariff war is creating massive uncertainty that's rippling through financial markets worldwide. The Federal Reserve is widely expected to cut interest rates by 25 basis points Wednesday, marking another attempt to stabilize an economy that's been battered by Trump's reckless trade policies. Markets have been on edge, with Asian equities showing mixed performance as investors try to navigate the economic wreckage left by Trump's tariff obsession. Let's be clear about what's happening here. The Fed is being forced to cut rates not because the economy is thriving, but because Trump's trade war has created such economic instability that central bankers are scrambling to prevent a complete meltdown. The labor market is softening, and while inflation hasn't spiked as much as initially feared, that's only because Trump's tariffs have been so economically destructive that they've actually suppressed economic activity. Trump himself seemed oblivious to the damage he's causing, saying Sunday that he thinks there should be a big cut in interest rates. This is the same man whose tariff policies have forced the Fed into this position in the first place. It's like an arsonist complaining that the fire department isn't working fast enough. The reality is that Trump's tariff war has been an unmitigated disaster. Since returning to office, his administration has imposed sweeping tariffs that have escalated into a full-blown trade war with multiple countries. The numbers are staggering and tell the story of complete policy failure. Current data shows that Trump's tariffs have reached astronomical levels. U.S. tariffs on Chinese goods now stand at over 57% and cover 100% of all goods. China has responded with average tariffs of 32.6% on U.S. exports, also covering 100% of goods. This represents an increase of nearly 37 percentage points since Trump's second administration began, more than twice the tariff increase during his entire first term. The economic impact has been devastating. These tariffs amount to an average tax increase of nearly $1,300 per U.S. household in 2025. That's not economic policy, that's economic warfare against American families. Trump's tariffs are now the largest tax hike since 1993, larger than tax increases under both Obama and George H.W. Bush. But Trump didn't stop with China. He's imposed tariffs on virtually everyone. Canada faced 25% tariffs, Mexico got hit with the same rate, and even close allies like India have been slapped with punitive measures.
President Donald Trump has now said that he put a 50% tariff on India because they are buying oil from Russia. That's not an easy thing to do. That's a big deal and it causes a rift with India, is what he has said. Meanwhile, the United States has also told G7 countries to join them in imposing tariffs on countries purchasing oil from Russia. This is the breaking news input we are getting in for you. CNN News 18 Sanjay Suri joins us live this morning. Sanjay, very good morning to you. Trump has always been a transactional leader, but these comments coming from him despite India repeatedly defending itself. How do you see this?
The latest development shows Trump announcing a 50% tariff on India specifically for their purchase of Russian oil, with the U.S. now asking G7 countries to join in imposing similar penalties. This represents a dramatic escalation in using trade policy as a geopolitical weapon. The European Union has been threatened with severe tariffs.
Big news which has now come in, and once again, it's Donald Trump who is in the eye of the news. The American president has urged the NATO allies to adopt sweeping measures to pressurize Moscow, including imposing 50 to 100% of tariffs on China until the Russia-Ukraine war is over. In a lengthy post on Truth Social, Donald Trump addressed all the NATO countries and the world and said that he has said that Washington was prepared to move forward with major sanctions on Russia, but only if European partners halted the purchase of Russian oil and joined in a coordinated action. Remember, he has always been speaking about the fact that Russian oil only has been, sponsoring and funding war against Ukraine. Akanksha is now joining us on the phone line. Akanksha, each day, Donald Trump makes it very clear, you buy Russian oil, you're going to have to pay the price.
With Trump now demanding that NATO allies halt all Russian oil purchases, or face tariffs ranging from 50 to 100%. He's essentially holding the entire Western alliance hostage, threatening economic warfare unless they comply with his demands about Russian energy imports. Trump has used the International Emergency Economic Powers Act to justify what can only be described as economic terrorism. What's particularly damaging is how Trump has weaponized trade policy for non-economic goals. He's claimed these tariffs are necessary to combat drug trafficking and immigration, using economic warfare to pursue unrelated policy objectives. This isn't trade policy, it's economic hostage-taking.
Or is tariffs where nobody knows what the tariff rates will be next month, let alone, a year, 2 years from now. It's this complete, utter chaos. It's sort of the whims of the president, and then the question of whether the courts even allow him to do what he's doing, which wreaks havoc with business. Any investment a business makes right now has a good chance of turning out to be a really bad investment because the tariff rate isn't what you thought it would be.
As one Nobel laureate economist recently explained, while traditional tariffs have predictable negative effects, Trump's unpredictable tariff policy creates unprecedented chaos for businesses. The real damage comes not just from the tariffs themselves, but from the complete uncertainty about future rates. Businesses making investments today have no idea what tariff rates will be next month or next year, making any kind of rational planning virtually impossible. The global response has been swift and decisive. Countries aren't just sitting back and taking Trump's economic abuse. China has retaliated with its own tariff increases, and multiple countries have imposed retaliatory measures. Canada initially imposed counter tariffs before partially withdrawing them.
So I think what we're looking at in Mexico is not really negotiating a new deal, partly because Canada still has both the CUSMA agreement that includes Mexico, but also the Comprehensive and Progressive Trans-Pacific Partnership, which includes both Canada and Mexico as parties. So there's already a significant amount of market access. What we're likely to be focused on is Canada and Mexico aligning on strategy in terms of handling the American disruptions and handling bilateral trade between the two parties that are separated by this kind of buffer state of the United States, because there is still a reasonably large amount of trade that happens bilaterally between the two countries.
With the trade that does already happen between these two countries, how high would you say the stakes are for this particular meeting?
So I think for the stakes for the trading relationship, probably not the highest. Again, because there is a relatively strong relationship already between the two different free trade agreements. I think the biggest issue here is going to be how the two countries coalesce and whether or not they can agree to kind of work together in terms of negotiating with the American government, especially on the sectoral sanctions. I mean, the auto market in particular is one that is very heavily diversified between the three different countries, with one vehicle often crossing a dozen, 24 times between the three before it's completed.
But the damage to the relationship remains. Trade experts are now reporting that rather than negotiating new deals, Canada and Mexico are focusing on aligning strategies to handle U.S. trade disruptions and strengthening their bilateral cooperation, particularly in the crucial auto sector where vehicles cross borders multiple times during production. The European Union has delayed presenting new sanctions, waiting to see how Trump's trade war unfolds. The market reaction tells the whole story. Asian markets are fluctuating because investors can't predict what Trump will do next. Hong Kong, Singapore, and Jakarta saw early gains, but that's more about hope for Fed intervention than confidence in Trump's policies. Seoul hit a record high, but only after South Korean officials scrapped a plan that would have hurt stock investors. They're trying to insulate themselves from Trump's chaos. Meanwhile, Shanghai edged down after data showed further weakness in China's economy. This isn't because China is weak, it's because Trump's trade war is forcing countries to find alternatives to U.S. trade. China's retail sales and industrial production growth have slowed, but that's largely because they're redirecting their economic activity away from the United States. The damage to Australia's markets is particularly telling. ANZ Bank, one of Australia's big four lenders, retreated after agreeing to pay a record fine. But the broader market weakness reflects concerns about Trump's unpredictable trade policies and their impact on global economic stability. What makes this even more infuriating is that Trump seems to think his tariff war is working.
Protests you've been on, why make this one your first one?
Because I think it's important for the future of my children and my grandchildren and the climate and women's rights. So for me, this is a very important moment for me and for the world that we recognise that this man is not helping the future of our climate and our country and our children.
He is the leader of one of our closest allies.
Yep.
We should be engaging with him, yes?
I think it's very difficult to engage with the tyrant, and I think if you capitulate to all his demands and a liar, we're not going to get very far, and we're just appeasing a monster, really.
Okay, Amanda, thank you.
Pleasure.
Tyrant.
Public opposition to his policies has reached a fever pitch, with protesters taking to the streets in unprecedented numbers. One demonstrator recently captured the mood perfectly, calling Trump's trade policies the work of a tyrant who's destroying the future for our children through his reckless economic warfare. Recent reports suggest Trump believes he's close to a trade deal with China, with Treasury Secretary Scott Bessent claiming talks are becoming more and more productive. But this is exactly the same pattern we saw during Trump's first term: create a crisis with tariffs, then claim credit for partially resolving the mess he created. The talks between China and the United States in Madrid this week are supposedly covering trade issues, with an eye on a November deadline for their tariff pause. But this is all theater. Trump creates artificial deadlines and crises to make himself look like a dealmaker, when in reality he's just cleaning up his own economic disasters. The TikTok issue is another perfect example of Trump's chaotic approach. Chinese Vice Premier He Lifeng and Treasury Secretary Scott Bessent are discussing their dispute over TikTok as part of these trade talks. Trump is using a social media app as leverage in trade negotiations. It's economic policy by hostage-taking. China's recent investigations into the U.S. semiconductor sector show how Trump's trade war is backfiring. Instead of bringing China to heel, his tariffs are pushing China to become more self-reliant and more aggressive in protecting its own interests. China has dropped an antitrust probe into Google while moving ahead with investigations into NVIDIA. They're picking and choosing their battles based on Trump's pressure. The semiconductor issue is particularly damaging to U.S. interests. China has effectively banned its big tech companies from ordering NVIDIA's AI chips, while Chinese authorities found that NVIDIA violated anti-monopoly law. This isn't just trade retaliation, it's China building walls around critical technology sectors to protect itself from Trump's economic warfare. Meanwhile, Trump's policies are forcing American companies to make difficult choices. Bristol-Myers Squibb recently announced it's selling 60% ownership in a pharmaceutical joint venture in China. As tariffs take hold and Trump demands more investment in the U.S., companies are being forced to exit foreign markets or face punitive measures. The agricultural sector is particularly vulnerable to Trump's trade war. The Trump administration is reportedly drawing up plans to use tariff revenue to fund programs supporting U.S. farmers, because his tariffs have destroyed agricultural export markets. Farmers are heading into harvest time, grappling with a drop in export sales and rising input costs, all because of Trump's trade policies. This is economic policy by destruction. Trump breaks trade relationships with tariffs, then uses the revenue from those tariffs to compensate the victims of his own policies. It's like burning down your house and then using the insurance money to buy a tent. The Federal Reserve is essentially being forced to clean up Trump's economic mess. The expected rate cut Wednesday is an attempt to counteract the economic damage caused by Trump's trade war. But monetary policy can only do so much when fiscal policy is actively destructive. Central banks in Canada, Britain, and Japan are also meeting this week, and they're all dealing with the fallout from Trump's tariff chaos. Global central bankers are having to coordinate responses to Trump's economic warfare, using monetary policy to try to stabilize markets that Trump has destabilized with his trade policies. The timing couldn't be worse. While the Fed tries to support economic growth and employment, Trump's tariffs are creating inflationary pressure and economic uncertainty. It's like trying to steer a car while someone else keeps grabbing the wheel. What's most damaging is how Trump's trade war is undermining America's economic leadership. The United States has traditionally been the champion of free trade and open markets. Trump has turned America into an economic bully, using tariffs to threaten allies and enemies alike.
Definitely a violation of international agreements. I mean, we built the world trading system, and I say we because that's the United States. The U.S. created this thing, which is a system of rules and laws. We've just ripped up a whole system of trading agreements, a system that we built over 90 years, because this really goes back to FDR. You don't put that back together. Even if the next president says, okay, my first act is to undo everything Trump did, the United States will never be trusted again. We used to be a country where if we made an agreement, that was an agreement. I mean, I was in the Reagan administration working on trade things, and there would be meetings in which some proposal would be floated, and the guy from the U.S. Trade Representative's office would say that would be GATT illegal, General Agreement on Tariffs and Trade, which binds this, and end the discussion. In the Reagan administration, if it was a violation of our international agreements, we didn't do it. This administration doesn't care. They don't even try to justify violating these agreements.
Economic experts are now warning about the permanent damage to America's international reputation from violating trade agreements. The U.S. built the global trading system over 90 years, and Trump has essentially ripped it up. Even if a future president reverses these policies, America will never be trusted again in international agreements. Countries are responding by finding alternatives to U.S. trade and investment. China and India are strengthening their economic ties, the European Union is exploring new trade relationships, and even close allies like Canada and Mexico are diversifying their economic partnerships to reduce dependence on the United States. Trump's claim that tariffs are perfect for cutting interest rates shows his complete misunderstanding of economic policy. Tariffs don't create conditions for rate cuts, they create economic instability that forces rate cuts. It's like claiming that breaking windows is good for the glass repair business. The global economic data tells the story of Trump's failure. U.S. GDP growth forecasts have been revised downward. Inflation projections have been raised, and unemployment is expected to tick higher. These aren't signs of economic success, they're signs of policy failure. Meanwhile, countries targeted by Trump's tariffs are adapting and moving on. China's economy is reorienting toward domestic consumption and trade with non-U.S. partners. India is focusing on expanding into new markets rather than bowing to U.S. pressure. The European Union is strengthening internal trade relationships and exploring partnerships with other regions. Trump's tariff war is essentially accelerating the decline of American economic influence. By weaponizing trade, he's forcing other countries to build economic relationships that exclude the United States. This isn't making America great again, it's making America irrelevant. The Federal Reserve's expected rate cut Wednesday will provide some temporary relief to markets, but it can't fix the fundamental damage caused by Trump's trade policies. Central banks can provide liquidity and lower borrowing costs, but they can't restore the trust and cooperation that Trump has destroyed with his tariff war. As Asian markets fluctuate and global investors hold their breath, one thing is clear. Trump's tariff war has been an economic disaster that's forced central banks around the world into damage control mode. The Fed's expected rate cut isn't a sign of economic strength. It's an admission that Trump's trade policies have created such economic chaos that extraordinary monetary intervention is necessary. This is what happens when trade policy is driven by ego and ignorance rather than economic logic. Trump promised that his tariffs would bring other countries to their knees, but instead he's brought the global economy to the brink of chaos while forcing America's own central bank to cut rates just to prevent a complete meltdown. The question isn't whether the Fed will cut rates Wednesday, it's whether monetary policy can continue to compensate for Trump's destructive fiscal policies. And based on the market volatility and global economic uncertainty we're seeing, the answer is looking increasingly doubtful.